Good morning, everybody. It is November the 20th, 2015, and we have option expirations for both treasuries and equity indexes. The math today for treasuries is 26.16 to 127, and that would mathematically make the close at 24, really where we are right now. On the 30-year, it's 54 to 55, and that would make the close at 54.16. And last trade was 54.21. And we can probably be pretty comfortable with Treasury staying in a trading range. The indexes are a different matter. So resistance is 28 to the buck. So our first sell is 27 to 31. Would obviously like to get that done as close to 27 as possible. Then 3 to 7 for sell 2. On the buy side, 13 to 17. We're going to put a question mark at 21. And we should get pretty good feedback from that quickly off the E-mini whether that 2090 level is going to hold or not. If 2090 comes out, it's going to be pretty easy to buy against 16. If 2090 holds as resistance, we're probably going to have to pay 21s, 22s to get in. Then 5 to 9 for buy 2. No news out overnight. The terrorists are on the move again in Mali. They've taken their luxury hotel, and 170 people are being held hostage right there. And what a lot of people, unless you've really traveled a lot and unless you've poked around, is that in all these third world countries, there is a little enclave in the capitals that houses their government and those facilities required to support Western businessmen, Western diplomats, etc. This is called the graft center of the capital cities, and foreign businessmen coming in, buying, bribing their way into contracts for goods not produced in that third world is where it's done. So you have these little compounds, and the hotels and stuff in these little compounds are world class. I mean, they're just they're 4, 3, 5-star hotels, and they're always targets for terrorist raid, and they're not too hard to get to. Of course, Mali is one of these countries that the Arab Spring has taken over, and usually rites in the spring are done about dancing around trees and flagpoles, and the rest of that they're not burning big bonfires. So anyway, that's probably the biggest news out overnight. Not much new going on in Syria other than the fact that the Russians and others are dropping lots of bombs and lots of aerial attacks on those opposed to Assad, and probably some ISIS is getting killed in the process. So we have a clean option expirations day. I think it's going to be pretty easy for the treasuries to trade in a tight range, 26.5 to 127 even, and we'll play for it. $27 is where the resistance should really stiffen up. Now, if the E-mini falls out of bed, and it's hard to see that happening, not impossible, then 21s is where we're going to have to get long. But for right now, we're going to play for the E-mini being able to take out 2090 and then hold that level. Okay, looking at the 30-year, knob spread was pretty close last night, didn't really change all that much. Resistance, definitely 155, same situation, so 27s to 31s, sell 1. 7s to 11s, sell 2. On the buy side, 13, we can get pretty low, so 9 to 13, buy 1. Support is at 54, resistance is at 55. Mathematically, the close should be 154.16, and again, if the 2090 is rejected and the market starts down, we're going to have to pay 17s, or maybe even a little bit higher than that. You just don't get the games played in the treasuries that you get in the indexes. And the reason for that is that anybody that puts a position on in treasuries, size doesn't matter. If you wanted to sell 10,000 or buy 10,000, you'd get it. It's a much different market, and they just don't play the games. Okay, gold 85 to 87. Sell 1, it's where resistance is. Sell 2 will be 90 to 92. Don't see that anything in the news or anything that's going on will take us higher. 75, let's see, the low is 78, so 78 to 80 by 1. And we'll pick up 73, 75 by 2. So 73, 78 is where support is, and that's what we'll play for. Okay, Draghi picked up the mic and took the bottom out of the euro market. Funny how he does that. And again, it's their central bank's aim to get the euro as low as they can so they can export outside of the European Union. And we were hoping to sell higher yesterday, didn't get it. Draghi, as their market's open, picked up the mic at 3 a.m. Eastern, and you know, somebody always knows. You can just see that as our market opened yesterday in Globex, it was sold, and you can see it was sold. And here's London when Draghi picks up the mic, and it comes down. So when you have announced speeches and the rest of that, just take a look at what goes on in that Globex up until the Asian hours, and that'll pretty much tell you what's going to come out of whoever's giving the speech mouth. Okay, we're rejecting prices below 106.70, so buy 1 is 675, buy 2 is 650. On the sell side, last trade is 690. The spill was from 714, so 7 to 710 is sell 1. 25 to 35 is sell 2. Like the short side better. Okay, crude oil, the reality is that it's pretty hard to find places to store crude above ground now. All the major crude carriers out there have been chartered. Most of them are floating storage right now. Some of them are moving. We still burn that stuff. In fact, demand for crude oil is up about 1.5 million barrels according to most people since the price has fallen. People are now talking about $20 crude before the selling is over. That would be catastrophic for the industry and for those that don't have access to financing. Vulture funds will come in and buy reserves about as cheap as they could be bought through bankruptcy, and the game will start over again, and the majors will really suffer too. Looking at where crude is right now, 42 and a quarter, sell 1. 42.50, 75, sell 2. Buy side, I think we're headed lower right now, but support is at 41 even, 41.25. So we'll play for our stops below 41. Buy 1 will be 41, 41.25, and then 40.25, 40.50. And to the E-mini. Okay, the E-mini's been pretty interesting. We started off this week with 2050 calls being bought, and the next day was 2060s and 2080s. And yesterday we thought that the biggest play would be in the 2100s, and that was the case. So on the put side, 2035s, 2040s, and 2050s. So there's pretty good support, 2030 to 2050. Yesterday's plays and puts with 2050. Resistance starts at 90, and there's no news to move the market. It's an option dynamic play today. And we came in last week, the talk was about record shorts in NYSE. Probably most of those have been taken care of, but there's some people that are still short. Option expiration tends to take the market higher. The Fed, well, what could please the Fed more than 2100 today? The highs in the 2137 area, all-time high, we're 30 points away. If 2100 comes out, then it sets up a retest of the current contract highs. So there's a lot of things that are pointing at 2100 this morning. The easiest trade is going to be see failure to take out 90. So our first sell failure to take out 88.90. On the buy side, because typically in options, they freeze the puts, they freeze the calls, they'll run it up, make sure all those people are pretty happy or confident that the market is going to trade higher or lower. Then that generally takes about an hour and a half or so to get out of the way, then they take it the other way. So it's just a game of freezing people in their positions so the market makers can make as much money as possible. So we've got this 2100. The easiest trade again to see is failure to take out 90. If that's the case, we ought to trust 75 to 77. Now, 80 right here is a possibility, and they usually make you pay up to get in. So early in the session, we are pointed higher. The London high, I'm pretty sure, is going to be taken out, as will when the day session, whatever Globex high is. So I think our first trade is going to get in there, and then we're going to see what we get. Today's news, Kansas City Fed, don't know what the estimates are. Last month it was -1, then Baker Hughes rig count, and nobody will pay any attention to that. So it's down to option expiration and how badly does the Fed want it higher, and what will they do to get it there. And if we close above 2100 in the face of everybody from the Fed telling us now that they're going to raise interest rates come December, I mean, that would just make the Fed really, really happy as a clam. So it's a shame that we have to sit back and we have to think in these kind of terms as opposed to normal market dynamics, but it's just the way it is. So that's what we got. It's going to take a bit to get everything up and posted. I'm going to get busy on it. I will be back with you as soon as possible.